What's going on, everybody in the chat? I hope everyone's having a fantastic Friday. I know I am. Uh, right before I brought the stream up, I was digging through some charts and I had a breakthrough moment, and I think I know where the markets are going. So, I'm gonna spend the first 10 to 12 minutes going through quickly the macro. We can talk a little bit about RH putting out that 40-minute voice recording, which I thought was hella bullish. I thought it was cool that we saw the go.hex.com get reinvigorated and decentralized to a further extent the day of Sam Bankman-Fried getting found guilty. So things are kind of aligning and coming together for the Hex community, the PulseChain ecosystem. And, the macro setups, I think looks good. So I'm going to pull that up in a second. I'm excited to share that with you guys. I got to do a lot of charts today, so maybe save the request for like the very end. I got an hour here to bring Crispy up, and we're gonna enlighten you guys on some new data sets and models that he's been working on. This is all leading into the launch of the Hexfire V2 website, which is coming. We've been hearing about it for months, but it's coming in the not too distant future. Shout out to Rodrigo. He's our newest member of axisALiVE.com. We got a new merch store. I got my axisALiVE merch. Make sure you have some if you're going to be on the cruise. Maybe I'll be giving some away. Got the hat, got everything. So yeah, check that out, axisalive.com/store. Anything else before we get loaded? I think I'm going to pull up ChrispyMan. How you doing, brother?
Hello, man. What's up? What's up?
A lot, man. We talk every day, it seems.
Yeah, I know.
Right?
I know. Yeah, we do, man. A lot going on in crypto.
People miss out on all the good conversation, But hey, here we are. We're live, so we'll give you what we can. We'll cram it into the next time. Trying to really encapsulate all of the things that we talk about behind closed doors in a 1-hour session is pretty difficult. There's always more being built than there is to show. So, but we're here for your enjoyment, pleasure, and entertainment. So I hope you guys are excited as I am to show some of Crispy's new work. But let me get into these macro charts quick. And, Chris, if you have anything to add to this with all your experience, you've been alive, a lot longer than I have, and you've been through your own fair share of market cycles. So if any of
makes me feel old.
If any of this rings true to you, though, or if you recognize patterns or if you have any knowledge or insight on the charts that I'm about to pull up, please let them know, man, because we rely on you. So let's see. I'm going to pull up the dollar chart. So check this out. The dollar, right? It's breaking down, right? And we like to see that because that means that people are fleeing dollars. They're no longer seeing dollars as the safe haven. By the way, this is a monthly chart. If we go into a daily chart, it'll look a lot more severe. So this breakdown here, it's breaking key levels, and this key level here, the 105.50. Now we're in free fall basically, and we want to see this candle close below by the end of the day. That's good for crypto. That's good for stocks, and that's kind of my point. Is that yesterday the Fed had a meeting and they decided that they were going to pause on rates. So I came back here and I tried to explain to you guys why pauses on rates are bad for they're good for the setup, right? They're setting up for something bigger, a bigger move in the markets. So I outlined here just a few times in the past where the Fed paused on rates. The key thing that we're looking for here is when they drop rates significantly, such as here or here, because usually what you get then is you get a crash in the stock market. So we're not at the crash in the stock market phase yet. We're up here in the pause phase, and usually when things are paused, it's actually a bullish or optimistic thing in the short term. So these pause areas, which I have outlined, are usually good for stocks. So now I'm going to pull up another chart. Since they went and paused, I expect this orange Fed funds rate line, this is on a monthly chart, to go flat now for any upwards of anywhere from like 5 to 8, 9, 10 months, where they'll try to keep rates elevated and to keep money expensive so that they can try to bring down inflation, essentially, right? So what does this pause on rates mean? Well, the stock market liked that a lot. So the stock market today is up big, and it's breaking key resistance as we're speaking. This is a monthly. Let's go down to a weekly. This is a massive bullish engulfing candle here. And this is a composite index of all of the big stock indices. And so like this candle here is a 5.6% candle, and it's coming into this resistance here. You know, but this isn't the only thing that's happening right now. We're also seeing that a couple things. One thing is that the bond market's getting stronger. So like these bonds, the 30 let's see, the 30-year bounced, the 10-year bounced, the 2-year bounced, and the shorter end is kind of rolling over, which is good because we want this yield curve inversion to fix itself. And so what I did was I combined all these bond markets together into one chart, and this is what you get. This was kind of what I found today was something so simple as I just wanted to see what's the effect of this pause on rates and this dollar dropping mean for risk off or risk on. Right now, risk seems to be coming back on in the sense that, well, the bond market's strengthening, right? And when you get these big if this candle closes up here at 5.2%, and this is now a U.S. bonds index. It measures the 30-year, the 10-year, the 2-year, and the 6-month. If this thing continues to come up to the top of the pennant, that's going to look pretty darn good for bonds. So that's what you could expect in a time when, you know, the dollar is coming down, right? So dollar comes down, bonds are going up, stocks are going up. Crypto's already performed well, and it's overperforming. Bitcoin already ripped before any of this happened. It was already set up. So it's just chilling out up there at 34, 35,000. It's ahead of the game. Crypto is ahead of the game here. Total crypto market cap up above critical resistance and trying to flip that as support. Any kind of a retest above 1.2 trillion is bullish. You know, we were seeing on some of my past streams here within the last couple of weeks, I was on with RG3, and in there we were talking about how there's so much Bitcoin trading on chain, and that always happens. We're talking hundreds of millions or billions of dollars trading on chain ahead of a big move on Bitcoin. So it actually predicted this big upsize move on cryptocurrency ahead of any of this other macro stuff that was going on. You know, you had people like Larry Fink from BlackRock coming on TV and saying that this is a flight to quality. But there was a couple things happening at once. The leading indicators on this move was Bitcoin and oil. So oil actually has been breaking down. It actually topped back in September and had this bearish engulfing candle and then had a lower high and is now potentially going to close this candle lower than this key support. So you're seeing the dollar breakdown as a correlating metric, but delayed. There's a lag between oil and the dollar. Oil and dollar like to track each other, but oil fell first and then the dollar fell second, right? So oil and the dollar the oil signaled dollar weakness early and Bitcoin signaled risk on early. So Bitcoin and oil were the things to watch on this trade, and now everything else is following. So what I did was I took the total stock market indices of all those indexes combined into one massive index, and I took my bond index and put it into one giant rising channel. And so what you can see here is currently, as the dollar falls and oil falls, bonds and stocks are rising, and now they're above the midline. Now, these candles close, form support, and go higher. That's going to set up for a bullish next 6 to 12 months potentially for everything: crypto, bonds, stocks. This bonds and index and stocks index combined together is telling us that this could be a potential well, it's showing that it's a bottoming area, and we're going to be seeing a massive macro-wide reversal in all markets. So I hope that this has been informative. I know it was for me to have this breakthrough today and to see all of these things coming together at once. Same time, gold is closing above 1990. So strong gold and strong Bitcoin at the same time means people are fleeing to a flight to quality, to use Larry Fink's words. You know, that's going to be one I'm going to be using a lot this cycle because it seems to be the one that sticks with the people that kind of were the laggards part of the adopter cycle theory. But so that's that. I don't know if you had anything, ChrispyMan, about this big, massive macro setup that you wanted to talk about, or I could pull up a chart. But if not, we can go into whatever you want to go into next.
Yeah, I'll tell you, since you outed me as being so old as the hills,
Oh,
right?
shit.
Yeah. Yeah, man, market cycle, right? You just state the obvious, and so pretty bullish, right? I mean, if that does come to fruition, not like up and to the right, better than down and to the right, you know, for all my assets. Yeah, I mean, you know, I think that one thing I was thinking about when you were talking about it after you asked that question is, yeah, you know, I remember 88 and I remember 90,
Uh-huh.
2000, you know, and 2001, of course, and 2008. I mean, things cycle. That's what happens. But when will gold hit 10K? That's what I want to know. Because
I don't know.
we've been talking about that for a long time. I used to look. I have like this one gold coin, like one, right? And every
You
once in a while I'll
used to?
pull
You
it
sold
out.
it for Hex?
No, I just have this coin,
Oh, okay.
and I think it was my great grandfather's coin. And I look at it, and all these years I was like, oh, someday this is going to be worth something. You know, it's still not worth anything. I mean, it's worth something, but it's just not. It's just not going up.
Yeah, I mean,
You know?
yeah, I can't give you an answer for when 10K gold, but the breakout. I mean, this is just a technical pattern. This is the cup and handle, right? So you measure from the base of the cup to the peak, and then you just bring that out from the bottom of the whatever the handle portion is to where it'll
Mm-hmm.
end up. And this shows somewhere around $3,000 an ounce. The time frame I can't obviously say, but usually when gold decides to move big like that, it moves like quickly. So in this case, when it broke its cup and handle, it took. Let's see here. Let's run a fractal quick, and then we'll see how long till 3K. Let's just say go. Let's go from here. Let's say this is it. We should be at 3K by September of 26, so the end of the bull market potentially for crypto.
Wow.
Maybe sooner. Maybe you get a spike up there sometime next September. That would be crazy if it goes straight up,
Mhm.
and then retest.
That's like what, a 50% move over 2 years. Nice.
Yeah. So gold. I mean, yeah, right. No, I got what you're saying, but yeah. So maybe not good in crypto terms, but hey, there's a lot of guys that have been sitting on gold a long time, and that's they have
Oh
millions,
yeah.
seven figures of this stuff. That this is a meaningful move. And by the way, that's a good point. Is this kind of where crypto is headed to? Especially Bitcoin with how far along it is in its adoption curve. Like, are we seeing people position now for a decade forward, 20 years forward, where the gains in Bitcoin are like 50% every 4 years, or 80% in this case, like big on this breakout on gold. Time will tell, but I think it just makes sense that as the market gets bigger and matures, the moves will be smaller, but there'll be a lot more liquidity there. So there'll be more, effectively, there'll be more opportunity for big players, less opportunity for small players. It's kind of why we're in the Hex game, Hex PulseChain game. So
For the volatility, baby.
I mean, if we'll get halfway to 10,000 by the end of the decade on gold, I don't know if that helps. Then you set up for another 20-year cup and handle pattern.
In 30 years, I'll come
Yeah.
back to you. We'll talk
By
about
the
it.
time you and I are in the grave, we might hit 10K Bitcoin, unless we go into hyperinflation, which could change everything. But
Yeah.
we'll be tracking it live. We'll be here at axisALiVE and ChrispyMan on Hexfire Live. Oh shit. So all right, cool. So there's some new data. Do we I shouldn't know if I should ask the chat. Should we go into the TA and chain analysis first, or should we go into let's go into the data. Let's go into the mining data. I'm gonna pull down, if you want to pull up a screen. Maybe we can look at some new mining data that we've been working on.
Which one you want to look at? You want to look at the 10 million example that we had put
Yeah,
together?
let's do that, because it gives people a visual of what the goal, if you're going to be a trader this cycle, what's the bar that you have to beat to beat what miners are going to do on a longer time frame, and you get to visually see it. I think it's pretty cool. So we'll pull up the Hex mining, the new mining charts that you've been building out.
All right. You think I would have been prepared? Give me 1 second.
No problem. I'm just reading the chat here.
I lost you. Here we go. Boom. Boom.
Sorry, guys, I missed some of that on the chat. I was busy spitting. Go ahead and just retype everything back in for me, please.
Spitting facts. You're spitting. All right, you got that?
I got her up. Yep.
Yeah. So this was something that that Axis and I had been talking about, and he had brought up. We want to take a look at, for a constant amount of hex, what would it look like if you were to mine it on? It doesn't matter what chain because the numbers are so close together. But what would happen if you went to mine it for? Yeah, I don't like that. Let's go back to black. If you were to mine it for any number of days, and we graph that out here on this chart here, and then taking a look at what the APYs might be and ROIs at 1 year, 2 year, all the way up to Quattro Cinco marks, and that type of thing. And then you had come back with some observations. All I did was really graph them up here. And I think one of the greatest observations, of course, is something that we don't normally visualize really well when we talk about it, is the idea that this thing goes hyperbolic, right? Or parabolic. So the longer you go out with those, and I guess this is what you're getting at, is if you're trying to beat this is what you have to try to beat.
Yeah.
And at the greatest, what we find out here is go down to our, I just highlight up here, overall, because these are, complete numbers overall, you've got to be able to beat a consistent 31% per year. Not just once, every single year, to be able to beat the mining and HEX. And then you have your own favorite little timeline section over here, starting with the 15 days all the way to Quattro Cinco, just showing that in kind of a smaller scale.
Yeah, let me explain that quick. So if you guys look, I'll direct your focus to the bottom right corner of the screen where you can see where we have the...
I'll break this one up bigger.
Yeah, awesome. So this is... So I chose 15 days because it's half of a month, right? And so like you get to see the APY of a stake for 15 days. And this is especially meaningful for guys that are doing 30 and 45 day stakes, like that have, multi-millions of HEX, which by the way, at these prices is pretty affordable. Maybe not for everybody, but it's affordable enough that if you're a serious investor, that you could get a seriously game-changing amount of HEX into your portfolio now at these prices, even at a penny on the ETH side, or 1.5 pennies on the PulseChain side. So I chose 15 days because it's half of a month, and then from every bar forward, you just double the amount of days, because I wanted to see like what that would look like if you're trying to like how to measure it kind of more like mathematically, like a computer would, like a binary code, right? So it's like. And I just wanted to see what the patterns were and the relationship was there. And so you'll notice that there's not really much of a difference until you get near that year mark. So between the 240 to 480 jump, that's when you really start to see the ROIs change for the miner. So I think everyone's got different views on short-term staking. I think my view on short-term staking is that if you're going to stake short, it doesn't really matter if you stake for 30 days or 120 days. Or 240 days even necessarily, because of the opportunity cost that you're giving up in terms of short-term price volatility. But that said, after you get past a year and you're going for like anywhere from 365 days to 480 days to 960 days, you're seeing massive changes in the APYs and HEX. And so that's where, when you're setting up that ladder over past a year, maybe you're going upwards of 400 days and longer, that's when you kind of raise the bar, and that's where I would start setting ladders. You wouldn't go less than that. Like why would you choose like 120 or 150 day stake over a 30-day stake and risk all that price volatility and opportunity versus just going out longer? Like why wouldn't you just go 480 days, a 960 day, a 1920, a 3840, and then ladder it out that way? Or maybe like we did in the early days, we started out far and we worked our way back. As you brought capital in, you'd start out far and work your way back. That way you'd have more of your stakes done. By the time you're set in your 480-day stake, you're already like 100 or 200 or 300 days into your 5555 stake or your 10-year stake, whatever. And I think that theory proves to be valuable and true. And yeah.
Yeah, I'll throw this at you. I think if I'm wearing my crypto hat, and I'm wearing my hex hat 100%, right? I mean, it's obvious that from a hex perspective, long term, right, you're going to get the best gains or in terms of rewards on APY by going out longer. I mean, it's just how the system's built. It's because it's very unforgiving, right? You can't go back and capture this stuff later. You have to do it up front. If I'm looking at that and I'm saying, okay, well, here's a spread of different percentages, perhaps doing a ladder, even with some of the shorter rungs being in there, you can get to an average or an APY where you're getting 15% across your whole bag, rather than 30%, for the longest rung and whatever the shortest is. And it all depends how you set it up, but that's pretty damn good. Because remember, these are APYs and hex. This doesn't take into account price appreciation at all. And so why do I think it's pretty good is when I'm coming at it from TradFi perspective, that I would like to be able to beat perhaps the 10% in the stock market. Yeah, 15% is pretty good, plus price appreciation when we're starting at crypto costs the way they are today. And even going a little bit further, I do this to look at this a little bit further again from my crypto mindset. Yeah, I don't, other than flexibility and timing, I'm not really interested in these short stakes, right?
Yeah.
But let's look at it from a different angle. You look at why people are in Bitcoin institutionally. Why are they in Ethereum institutionally? Sure, maybe you only got a double over 4 years in Bitcoin, or a triple, right? Between when they had gotten in during the pre-bull for the last run. But nevertheless, if you look at the performance, and I do this on the DCA streams weekly, man, if you're outside of crypto and you've now become a believer in Bitcoin, crypto, Ethereum, that looks pretty damn good because it beats what they can get in the market. And I think that's the kind of stuff we want to be able to see with Hex as well. And so coming in here and being able to say that you can get a steady 8% in the tokens, even for short, is pretty damn good for attracting new adoption, I think.
Yeah, but so let me be clear about this. So when I'm talking about short staking, there is value to staking short. But my whole thing that I want you guys to remember is the difference between staking for 30 days and less than 240 days is you're giving up too much opportunity cost. That I would say stake longer or just stick to 30 to 45 days is basically what I'm saying. And I think the statistics and the data reflects that. That's where Hexagon's heads are at. Like they're doing 30 to 45 day stakes.
Oh God, yeah. I mean, it's up to over 4 billion.
So
it might be even more than that.
So that's interesting, right? There's 4 billion. Can we pull up back to the curve? I just want to show people that again to show you how you can see there what I'm saying. It's easy to outperform that if you have a liquid bag. So until you get to like basically, the curve really starts to change when you hit like a year. When you hit 2 years, I mean, it's basically starting to go parabolic. By year 3, you're basically you're already parabolic in terms of returns. So and this is assuming that staking behavior stays the same. Obviously, we're hex bulls. We think that the staking behavior is going to increase a dramatic amount. You're going to see it from every angle too. You're going to see the price go bananas a cycle, and tons of people are going to nuke their bags, and it's going to pop the APYs up, and people are going to come in, flood in behind them, buy up those bags on a discount, and lock them up, and you're going to see T-shirt rate rise, and all these factors are going to combine to create like a hurricane of crazy price performance from every angle for stakers and non-stakers alike. The volatility of this cycle is going to be pretty crazy. Like if we thought it was crazy last cycle, it's going to be even crazier this cycle.
Yeah, I concur, and I think that's going to be definitely driven by by the age of our ecosystem as well. And just the fact that we're approaching 5 years, which will be 50% of a 10-year stake, and a lot of people went out 10 years. On Eagle's point, this chart that we're seeing up here is showing both chains. It's just that right now with the data that we have on both chains, they're so similar, they're on top of each other. And so, you know, the EHEX side just slightly outpaces the HEX side right now in terms of returns. But they're both up here on the screen, and you can see the pink just slightly above the green up there.
That's the Ethereum side, yeah.
Yeah, that's the Ethereum side, and the reason for that is that we're beginning to see a divergence. But when you talk about being bearish, you know, it's always going to come down to us guys, the community. There's a lot more action on PulseChain than on Ethereum. It's a lot cheaper on PulseChain than Ethereum, and that doesn't mean there's not opportunity on Ethereum. What it means is that we have to decide which way we're going to go, whether you're a whale, super whale, whatever, Poseidon, shark. And if you are going to partake on the Ethereum side, you can make it move. Obviously, we've seen it move. Now, I don't know about flippenings and all that kind of stuff. I mean, I like the idea of flippening, right? Who wouldn't like to see EHEX double? PX just for fun, right? You know, just to see it happen. But remember, we do have a lot of liquidity laid in now on the PulseChain side. And so the likelihood of a flippening, it's just harder to do. Right, to do a flippening, but certainly you could see like mad gains on Ethereum. We just saw what happened with it; just went up 3x, right, and came back down a little bit. But man, who doesn't like this new value for EHEX?
Yeah, people are definitely eager to get into the Alex the whale thing. I know we're guilty as charged for bringing on a guy that market bought 100K live on stream.
Guilty. Guilty for talking to somebody who's doing something, right? Guilty for that.
You know, and so there's actually a lot to talk about there. But let's get through the HEX data part, and then we'll definitely pull that up. I know people are eager to hear our opinions on that. So let me just go ahead and start some stuff. All right, let's see. We got any other dashboards we want to pull up?
Yeah, we can just briefly do it. If somebody wants to go see. You'd like to go check out the calculator that we now have up on the Hexfire site.
This one.
This is another one that's out there. You can go to hexfire.io and see it. We are calculating. I am calculating out, you know, what the results would be now for doing a stake on a miner on either chain. I'm just going out 100,000 Quattro Cinco, and you see my little tombstones over here on the left-hand side of the screen. They're so close that they might as well be the same, but the ROI on Ethereum side for 100,000 hex for Quattro Cinco is 484% versus 480% on the PulseChain side. And that's just, again, a reflection of the differences of behavior between the two chains right now. And again, I just restated, it's going to depend on us and whether we decide we're going to support. You know, the community's got to support, right? And if you don't support EHEX, then it'll go away. If you support it, it won't go away. Or whatever the percentage of that is in between. What did you like about this the most?
Yeah, I think so. A couple takeaways that from this particular. You can actually pull up the whole panel. I like this, but let me just like 100. So to your example that you pulled up, 100,000 hex right now is like $850, $900, something like that. Like. That's pretty affordable, and the fact that you could put $850 down the day and lock it up for let's just say hypothetically you're in the market to lock this stuff up for a long term, like you could 4x 5x your stack. That's 6x if the behavior changes in the system. Like that's pretty incredible that you could just sit on your bag for 15 years. Now, granted, you know, I'm sure that there's at least one or two people in their 70s right now that are like, I'm not locking my shit up for 15 years. And yeah, definitely not recommended for you. But for the younger folks, definitely they should be considering taking like a bit of your couple paychecks, maybe throwing it together and putting one out long. That way, any mistakes you make along the way, you can this is your hedge and mitigate. And you see it here when you look at these graphs on the right. That yellow line is your rolling hex that you're making per year. So like on year one, you're going to make 24,000 on 100,000 hex. By year 4, you're made whole. You already made 100%, right? By year 4, by 2027, you have already made over 100,000 hex in interest. And by year 7, you could nuke the bag at any price that's higher than where you started and make money, right? So it's like, not to say that that's the suggestion, but to say that that's an optionality that you get with emergency end stakes. And so there's a lot of things here. I personally think that a couple things that I notice is there's 2 points in this chart where the yellow line increases at a drastically higher rate, and that's between 2029 and 2030, and then between 2034 and 2035, or 35 and 36. And I think that's because that's where we have a massive boatload of stakes that's ending all around that time frame. And so when you're looking at staking, maybe you gear it so that you're front running that, or you're capturing all of the price gains that comes after that before the next one. And it seems like if this is like a pattern going forward in the next 30 years, that you might see 10-year and 15 years out from the starting launch day of 2019, December 2nd, 2019, you might see that 10-year mark and that 15-year mark as that gets patterned out over time when all those stakes come off.
Yep. Yeah, one of my long-term bets, not financial advice, is to make sure I have T shares in place all through 29 and 30, so that I collect as much of the rewards as possible for the potential bull in 32, 33. Now that's a long time, man. That's 10 years from now I'm talking about, but we've been here for 4 years already. So it's not that long, right? I mean, time does pass. And the thing is you can't, I mean, you can decide maybe through some derivatives or HSIs later to try to capture some of this. But the thing is I can't decide in 27, and get the same size position, right, as I can today. And so, I just don't put as much out there. That's all. I mean, I risk assess what I'm doing, but I still want to be in during that period.
Yeah, I think another valuable piece of information for people based on what you were just saying about the share rate kind of outpacing you is what you're realistically looking at is a 20% increase from this date forward 1 year. And I bet I'm going to make the assumption that that's probably true every year forward after that within a certain margin
share
of
rate?
error.
Yeah, it's at 25-30% a year. Sure.
Yeah. So then here's the factors that you're competing against by not staking is if you ever plan to stake in the future, you have to outpace the 25% change year over year of the share rate, either by the price falling far enough that you can capture up more than 25% more hex, and then wait the year, and then now you're back to break even in terms of what you can get in T shares. Or let's see, what's another factor that you can have to outpace? Or you have to outpace the insane 480% returns over a 15-year stake in hex terms by trading your way there, potentially, a combination of compounding short-term stakes, laddered stakes, and then selling local tops and buying local bottoms, which isn't out of the question. I know a lot of hexagons have done that successfully, and that's kind of part of what we're all about at axisALiVE.com is optimizing and compounding your returns and being transparent about all that. But for somebody that just wants to make passive income, the best route is to always start out farther and then it's a hedge, right? Hedge means that you're gonna take a portion of your bag and delay gratification and put it out in the future so that it's always going to be paying you every day. So you're effectively DCAing in every day, no matter what. And it's been powerful for people that staked early, even guys that staked after big payday, which was a couple years ago now. They're almost 50% of their bag or their stakes are, in some cases, are interest, or that's not principal, right? So you're trying to outpace all these metrics. It's either you're fighting the T-share rate increase or you're fighting the bull market, right? If things are going up constantly, when it gets bullish, like you can get left behind and then you never can recapture your bag. Or you're fighting the APYs that you could get by having staked a lot longer back in the past, right? And going forward, right? So the best route is always, in my mind, to have a laddered out, hex staking ladder out, and then have something liquid in the present that you can use as a combination of rolling and liquid.
Yeah, I agree with that approach. In fact, I try to do that, though my liquid looks more like shorter stakes with a liquid, so I can get at it quicker. The other thing that comes to mind as we talk about this is, and a lot of people miss this, right? Is that, a lot of people are like, I already missed it. It used to be 40%. All these other guys are getting higher numbers than me. If I come in now, I'm going to get a lower percentage. And you're right, you will get a lower APY. But what we've observed in the system, the way it's worked, has been that once you get your ladder built, the ladder APY actually floats upwards. I mean, look at this one. This is remember, we're looking at a single stake here. So it's one stake. And every year the APY floats up a little higher. That's a reflection of that change in cost of T-shares and what we're forecasting to be the drawdown in the T-share count, which just means you get a greater and greater amount of the rewards per T-share over time, to the point that by the time you're at the end, you're up at 40%. But here's the trick of this is the longer I wait to go in to start, the lower my starting APY is. All right, that's just typically how it's been. And that may change with some volatility in the system. Don't know, but that's what I've observed. Is the longer I wait, it used to be a year ago I could get 29% by doing a Quattro Cinco out of the gate. Now it's 24%. So it's just going to continue to kind of float down in that direction. Now, for everybody who just said "F it," I'm not interested because look, it's just no good because I can't get all this stuff, right? Those of us who are in, go to, I don't know, go to look at somebody's ladder, look at your own ladder. I can't maintain my T-shares. There's no way I can maintain them. I'd have to come in with hundreds of thousands of dollars probably over 10 years. Where's that going to come from, right, to
Yeah.
maintain my T-shares? Because, you got to pay. The only way you can maintain if somebody's already in the system, this is why it's good news for the new guys. The only way they can maintain is you got to go out longer or add more value. And both of those are bullish for HEX, right? That's the
Mhm.
only way that they can maintain it. And so what that means is it opens up lots of opportunity for new people in terms of mining.
Yeah, Hex is going to get really scarce, and part of that scarcity is going to drive prices a lot higher. And so, any opportunity that you're seeing today is kind of like a once in a lifetime opportunity at these lows in the bear market. I know it doesn't feel like it because we've been experiencing like the most terrible downside you could ever imagine, minus 99% on EHEX. But if we're being realistic about where that capital went, it got distributed amongst PulseX, PHEX, and about 150,000 million sacrifice faces. So that all that redistribution of wealth and all these other little assets, it's going to seek those returns that are just ungettable anywhere else from the hex contract, and it's really going to drive prices a lot higher and create floor prices. I think people don't believe that that's a possibility, that hex starts putting in floor prices that are never like retraced. But once that reality hits and it hits hard, the cost to get T shares at that point is going to be so astronomical that there's just no way that any amount of new capital coming in, unless you're talking like billions or trillions, is going to be able to push that T share rate back up. I'm sorry, to push that the amount of total T shares in the system back up ever without raising the price of Hex astronomically higher. And that's what we're saying is that acts like kind of like it's like a magnet that repels the price away from the floor price and pushes it way back up. As people really understand and seek the yield within the Hex contract, and that's why I think there's a world where both Hex on Ethereum and Hex on PulseChain coexist and they oscillate in around parity, is because the big money will have to play wherever the T shares are more affordable. And when we're talking T shares in the order of magnitude of tens of thousands of dollars per T share, or hundreds of thousands, or even millions of dollars per T share, the gas fees at that point don't even matter to those guys anymore because they're looking at the returns that you can get. Because after all this has been put through the wash, Hex price is just going to be so much higher that there's just going to be no coming back, and there's no way that it'd be reasonable for that much capital to come into Hex to push the total T-share count back up high enough to dilute those guys that got in early, I guess is what I'm trying to say. So I'm trying to say it simply, but I know it's complex and there's a lot of moving parts to the T-share system. But just understand that Crispy and I are out here talking about T-shares right now when no one wants to hear about it, because it is really a tremendous opportunity for everybody that's involved in the Hex ecosystem.
100%. A comment Finbear made in the chat. He was asking about T-shares. I know this kind of goes back to the Richard Hart thinking, right? And the kind of direction we were given. I shouldn't say direction, but just listening to him and the learning and whatnot. Those people who came in on day 3 and were staked over big payday, they're likely to be able to get the same number of T-shares without having to increase or extend. But anybody who didn't participate in big payday, they cannot. Almost 100% cannot do that. So it's pretty interesting stuff.
Yeah. Pretty cool. I think that's a good capstone for T-shares. I don't know how you could sell it better.
Oh, dude,
Bullish on T-shares.
I love them. I was getting sad. I can't maintain them. Getting sad.
Let's pull up some TA and try to explain why the Hex price is going to create price floors and go a lot higher, right?
Yeah, I kind of think that maybe the first one is that 0.003. Is that a floor? Do you consider that a floor now?
What are we talking about?
The price of Hex at 0.003, 0.3.
Oh, sure. Yeah. I mean, I like to look at it against ETH. So let's look at it against the dollar quick, and then so this is EHEX, right? And this is, if you take off log, this is like reminding me a lot of the kind of action we get when Godwell got in all the way back then. Because look at how small these candles are down here. This is like basically floor type situation that's going on. Yeah, definitely. In dollar terms, this is a pretty exciting time to be in Hex. If you switch on the log button, you could see how astronomical that move was off those lows. We're talking like a 3x from wick to wick, 343%. And as I'm talking right now, it looks like there is demand here at these prices. Like somebody is coming back in, and this is a huge wick. I haven't seen a wick this big since back before the last time we bottomed about a year ago. Or not a year ago, earlier this year, right here. You saw a lot of these big wicks. End of last year in December, there was a big one, a bunch of them in a row here. And then this was the one I was referring to, this massive downside wick. That was a $1.5 million candle. And then it just kind of rounded out, and that was it. And then we ended up running up to 12 cents after that. So if you go to modern time, there are similarities here in the bid action that we're getting in. There's a lot of consolidation. Now, if I zoom out here on like a daily chart on EHEX and just show you kind of where we're at, we're fighting this resistance line right now. So, I mean, these lows here in my mind are put in, and we're just testing this as support. Without going into detail on the actual actors behind it and my beliefs of that, this just to me looks like consolidation above. This is just to me right now, this is setting up, this is a bull flag. And there's a lot of volatility. There's a lot of volume coming in here at these prices on this Hex WETH pair. So we're trying to flip the support breakdown resistance, broke right through it, no problem. We're trying to flip that as support. If we do that, maybe we grind down into here, we break out, and then we go, or this just flips and goes, right? It could do that too. That's what I'm so scared to exit my EHEX position looking at this chart, is because like the amount of volume coming in down here and the amount of buyback is not something to ignore. We're basically trying to get above this purple line here. You can see that right here. This is where we got rejected from the 12-cent top, right? And so whether or not we flip that as support now, or in 2 weeks, or in 3 weeks, or in the early next year, I guess that is left to be decided by the market. I know in my personal beliefs, when I'm looking at this chain data and I see a guy emergency end stake, let's go to like the 4 hour here. I see a guy emergency end stake and use MetaMask to swap his emergency end staked bag with like a 7 million hex penalty or a 20 million hex penalty into USDC. I know that guy's living in 2021. He's using his MetaMask to swap into USDC. eating all those fees and all that slippage, and then someone smarter than him is coming in and buying his bag up, whether that's capitulation or forced selling or just lunacy. I don't know. I'm trying to stay neutral on it, but I just look at that as like this is just smart money buying Hex at the best price and continuing to create scarcity and buy up all of it inside of this range before sending it higher. Now, if we look at Hexfire.io and go ahead and say what you're going to say, I'm going to pull up the liquidity chart while you're going on that thought.
Yeah, I was just thinking to myself, hey, if you're one of those folks out there that's doing the merchant stakes, we know there's a lot of different reasons you might do it. It's hard for anybody viewing it to understand why people are doing it. You want to come on stream, let us know. I sure would like to ask some questions, because I think some of it's benevolent. I really do. I think some people are doing it in a way that they figure they got enough. So they take what they take, and the rest goes to the community.
Okay. Well, and then if we're looking at the ETH side, what we're seeing is a down. We're losing Hex basically. So the top line is the ETH going back to early summer. Let's go back to January. Let's not go that far. Let's go here. Let's go to like April when we were peaking out, and there was a lot of ETH in the pools, and there wasn't very much Hex. And there was a lot of US. So people were flipping their USDC and their ETH into Hex in April when we were running up to 12 cents. And then we had our blow off top and the fork, and then prices declined drastically because all of that ETH and all that USDC got pulled out of the pools, and all that Hex got redeposited back into the pools. Well, ever since then, we topped around 225 million Hex multiple times all summer long. And then now it's starting to really curve out and round out on those longer time frames. So if I zoom back down a little bit, you can see that we've seen a huge flush of ETH come back in, and it's curving up. Like to me, this looks like the ETH coming in is increasing at an increasing rate, going parabolic, and the amount of Hex coming in is like flat down into the right, but also kind of flatlined right now. And USD is pretty much not even being used. So the USD pool is out of the question until we get back up to that 3 to 5 cent range where there's actually USDC available for the market to trade. So I think right now the game is Hex ETH on the ETH side. And, as you can see here, back in August, we were at a peak of around 236 million Hex. Well, a lot of that's been absorbed on those lows. And you could see this is where the big move happened. October 3rd, we had all this ETH enter the lobby. It was only really 300 ETH that was able to push the price up. Where's my chart? This much here. This 300% move. It was only just 300 ETH that did that basically. And I've noticed another guy coming in and using another 300 ETH and buying up all the supply in this range, creating support on this half a penny range roughly. And like I said before, there's guys that don't understand what's going on the longer time frames, and they're just nuking their stack. Like if we zoom out here, look at this is EHEX. I pointed out a couple other times in history where we came into a resistance, and we went sideways for a few weeks here. So the question is like, are we gonna use this as a grind line, and EHEX is gonna grind down and then pop, or are we just gonna go sideways here and this is an accumulation zone before the pop? I don't really think it's a realistic scenario where too many guys are eager to dump their whole stack down here below a penny when they know how high it can go. When we were just at 12 cents a few months ago, it would be pretty foolish if you ask me. So
I don't know if this is helpful to you, but from the data that I'm observing, we have more and more wallets holding Hex on on Ethereum EX, and so of course that's reflected in the circulating supply. So since they're accumulating, it would seem to me that they're not accumulating in order to take a loss. I mean, certainly people do that. But then the other thing about what's happening is we haven't seen minor capitulation. Sure, we got this guy today. There's others, but a serious capitulation would be hundreds of millions of Hex coming out, and we're not seeing that. So it makes me tend to think that we don't, unless somebody decides to lose their stuff and not keep their Hex liquid that they have that's liquid, and they just decide they're going to get out before the bull run. Why would it go down?
Yeah.
Whale moves, whale games, maybe. I don't know.
Well, and to your point, like I feel like a lot of that emergency end staking and that minor capitulation, that's reflected very well in this hex ratio chart, right? Because here you can see, if you go back and look, and you could just back me on this, I think, if it's true, when all this action was happening where PHEX really gained on EHEX, wasn't that a lot of minor capitulation and chasing PHEX, this whole parabolic move? And so once those guys are out of their stacks on Ethereum side, they're gonna have to do it again. Is that what am I understanding that right?
Yeah, I mean, to the extent that they could. I mean, we don't know individuals or wallets, right? But I guess we could look up addresses. But yeah, I mean, that a lot of that was fueled by emergency end stakes in that very short period of time in order to buy up the PHEX supply, the PulseChain hex supply. And I mean, at least that ammunition is already gone. It's not there anymore.
Yeah.
Right.
Yeah. Couple, I don't know if you guys notice this or not, but so maybe not. This is my thinking on this PHEX EHEX ratio. Just while I'm here on this tab, this ratio typically tops somewhere around the 70 level here on the RSI. So if I maximize this panel, you'll see that we topped here at 72, we topped here at 73, we topped here at 71 in terms of the ratio. And then with the exception of that minor capitulation, which pushed this up to 87 on the RSI, but that only happened one time. So I think for me, the question becomes, are we going up to that 70 line before coming back down in favor of VHEX, or are we going up to the 87 line before coming back down on the ratio? And if people are going to spend a lot of their Ethereum hex energy to get it there, how long does it hold before it just spits back down? They're running out of ammo. I think there's way less people that want to abandon one chain than there are people that want to love both chains. Personally, I just kind of silly to nuke both your bags when you know that there's enough economic energy in the world to pump both hexes to all-time highs. So I guess I don't follow that, but yeah.
Well, yeah, and this is very anecdotal. We know there's more activity on PulseChain, but the activity doesn't mean there's more dollars. Right. So I was mentioning this to you the other day that, I thought that I would see that the dollars would go hand in hand with the number of transactions, but we have 10 times as many transactions roughly on PulseChain for HEX than we do on Ethereum for HEX, but the dollars are only 20% higher, which kind of infers to me that, and this is with the HEX being twice the price most of the time, right? And so it kind of refers to me that there's a lot of rearranging of the deck chairs going on, and not so much not so much new people coming in, new adoption, and certainly not capitulation. So it's people trading money with themselves back and forth, back and forth, back and forth on this ratio game, which good for them if they win, but too bad if you lost. I don't like that part, but yeah, I think that's what we're really seeing. And so kind of supporting your point again, I guess they could drive it that way if they decide to take, dump the EHEX that they might have accumulated for more PHEX to drive that ratio up and go in that direction, or vice versa,
Yeah, it's to your point about the transactions versus actual real new fresh capital volume coming in. Look here on the HEX pair, you got $200,000 of buy and seller volume. And then if you look at PHEX versus Pulse, you got another 1.6 million. So just those two, you got about $1.8 million of volume swapping around on a couple of the PHEX pairs. But just on the EHEX pair on Ethereum, we have $3.3 million of volume. So it's kind of a joke when you think about this whole narrative. Look, guys, the EHEX is being accumulated for a reason. It's not going away. So the volume is telling you the whole story. Whether we want to admit it or not, PulseChain. I love PulseChain, by the way. I have bags. Whether we want to admit it or not, all of our value comes from Ethereum. Whether it's WETH, whether it's stable coins from Ethereum, that's where our value comes from. And when EHEX goes up, guess what? So does the bridge money. What do I mean by that? Well, if I look at the bridge here, let's look at the bridge. When this EHEX number goes up in value, the amount of dollars available for trade on PulseChain goes up because there's $1.9 billion of EHEX, or I'm sorry, 1.9 billion EHEX on the chain. If EX does a doubling in price, well, now all of a sudden you go from having $16 million to $32 million over just instantly. And all you had to do was pump 300 ETH into the chart. So this was at 7 million bucks. And then I saw the price chart of EX triple, and then it went from 7 to 14 to 21 million of dollars of bridged in money and PulseChain just because EX is accruing value. So this whole narrative is just totally broken down. I wanted to also look at, we saw the amount of like this HEX liquidity on Ethereum. We're sitting around 123 million, which is like it's a stable level. This is usually where you sit. You sit in a bullish trend on Ethereum. You usually see the HEX number go between 50 million and 120 million. When it's bearish, you see it get as high as 225 million. That's just the history. But let's look at the PulseChain side. So the PulseChain side, this is what it was before. So over the past 3-4 months, the hexes have been getting depleted out of the liquidity pools, and the Pulse has been depleting as well. But it actually had a recent surge where people were using Pulse to pay for the hexes. So there was more Pulse being deposited relative to the amount of hexes being withdrawn from the pools. Now, is that bottoming here, and is Pulse about ready to go up and get more rare, and people are going to flip their hexes into Pulse? I don't know that. I don't want to play that game yet. But in terms of like relative strength recently, we've seen both of the hexes drastically outperform Pulse. EHEX went up like massively. It went from 75 all the way up to 190 Pulse per EHEX, and then on the PHEX side of things, it went from 168 all the way up to 256 Pulse per PHEX. So I think you could expect that trend to continue, that the hexes will continue to be more volatile and give opportunity to multiply your Pulse bags, but also in return, it'll create floor prices against Pulse over time. I know that's controversial. You have other influencers who say that money will flow back into Pulse and PulseX, which is true. But I think at the end of the road, HEX is where the value gets stored. And we've even seen that in the relationship between Bitcoin and Ethereum. So if I go over to Bitcoin and Ethereum here and show you what's been going on that side of the neck of the woods, Ethereum's been in a downtrend against Bitcoin for 686 days. It just can't. It topped out, rolled over, and so if this is similar to what the HEX is going to do to Pulse, there will be periods where Pulse outperforms the hexes, and then there's going to be periods where the hexes outperform Pulse. But at the end of the day, they'll both rise in price, so you're going to win on either side. That's why it's good to have a bit of everything. And if you want to play the ratio trading game, you have to basically bet that your ratio trading is better than 480% APY on a max length stake. And you got to combine that fact with the opportunity cost of not staking now and waiting a year, which is a 25% increase in the cost to produce that 486% return. So there's a lot of things to variables. I think, staking some, having some liquid, having some short rolling, doing a little bit of ratio trading, probably a combination of all these, and then using them to the best of your ability and compounding your short-term stack so that you can stake more out, and then compound your short-term stack, stake more out. Kind of would be a good way to accrue value in your bag over time.
Yeah, and never sell. And not financial advice. Not financial advice. Probably, for those who are really super new into crypto, having a longer view and not planning to try to, this is controversial as well, but not planning to try to take profits in 24 and 25 and rather wait for 28, 29. That's a tough sale, man. I get it. It's hard. People don't want to hear that, don't want to do that, because we all would like to think that we're going to be able to pick the top, pull out a bunch of money, hold on to it, and hold on to it for a year and a half and buy the bottom. That's what we think we'd like to do, except in reality, particularly with smaller short money, dudes, man, if I get $10,000 and I got stuff I want to do and the wife wants to go on vacation or something, it's probably spent. And a year and a half later, I may not have the money to actually put it back in, right? So anyways, I think that's I think that's part of the stuff we tell ourselves we're going to do, but then very few people actually pull it off.
Mm-hmm.
You
So I
know, I
just want
mean,
to
it's a
remind
long
everyone
time.
about this market cycle, which is something we've talked about till we're blue in the face, which is that this is the year to buy, right? Based on something that's been accurate for 100 years. 2023 is the year to buy, and then I got my eye on 2026. Some people say earlier, some people say later. This is what I got my eye on, is this cycle. I'm not too eager to dump my bags anytime soon. So keep that in mind when we're talking about, should I sell my bag at a penny EHEX and buy it back at 003 if it comes back down? The opportunity cost of missing that and the floor price getting put in, and then you get to buy back at 2 to 3 cents. Don't play that game. Johnny Chaos played that game between 1 and 2 Satoshis, and it worked out poorly for him. He ended up losing half his stack. So don't play that game. We wanted to talk a little bit about COM, right?
Yeah, I think people probably have some questions about it.
So this is
It's a beautiful chart.
You're not giving away the serious, like, ultimate knowledge of it, are you? We're not giving that away.
Which part? Which part?
About Ecom?
Oh yeah, the Johnny Sack stuff is pretty public. Wait, you talk about Ecom on PulseChain?
This chart. I know you know what chart this is. This is communist on Ethereum, from Ethereum on PulseChain. Yeah.
On PulseChain, yeah. So this has been a little pet project. You know this that I've been
I don't know if you should
involved
say it.
in.
You might ruin it. You might wreck everything by saying
not,
this.
I don't say anything. I just felt like, hey, listen, we're hex stakers, hex miners, right? Then we get this communists from Ethereum, and so some of us got together and actually just tried to keep a market going here, at least make it so that you can bridge over from Ethereum onto the Pulse chain, and that created kind of like a little bit of a chain reaction of sorts, right? So at least there was a path out. Now, at the same time, Johnny Sachs, some other people have been super interested in communists on PulseChain, and that market's really taken off. That was the previous chart. And what's really weird is we're beginning to see, this is positive weird, we're beginning to see a backlash into the Ethereum side, where now there's a lot more interest on Ethereum for the communists over on Ethereum. But these charts have performed phenomenally since the beginning of the launch, I think.
Yeah, let me see here. I got to pull up the measuring stick because the ruler doesn't work. It's such a big gain. 69.54. So it's up 7,000% from the lows. Now, granted, there's only $2,000 of pulse backing it, but still, if you put in $400 down here, you could have extracted some massive gains.
Yeah, but let's talk about that for a minute. That's what it shows here, but I'm not sure they've incorporated 9-inch yet, or Fox. No, sorry, PHUX. I can't think about how I'm supposed to actually say that. PHUX. Yeah, PHUX. Right, so I don't think it incorporates those two, and at the very least on PHUX, Johnny's saying he put 50K in there, right? So there is a ton of LP now for COM on PulseChain.
Yeah, so a billion. I'm just doing arbitrarily a $61,000 buy, billion pulse into communists. Looks like 43% of that is hitting the PulseX pools, and oh wow, it just changed.
Yeah, so somebody just front running you.
So 100% of it is going through Pulse to PulseX, but the breakdown inside of there is 94% PulseX V1, 4.5% PHUX, 1.39% 9-inch. So weird that there's all that liquidity over there, but it's only going to pull from, most of it's going to get pulled from PulseX V1. Huh.
Yeah.
Is this V1?
Well, I think I as a public service announcement, other people probably seen it. You talked about it today. Remember, guys, when we're looking at the internet, you can't guarantee what you're seeing. And sometimes there's some lags, and like Dex Screener was lagging pretty heavily today. 30 minutes. So if you were using that to pick prices, you better watch out, right? And anyways, just saying, there's probably some efficiencies in how all the software works right at the moment. which means opportunity.
Yeah, so I don't recommend you guys go do a $61,000 market buy of COM, but let's see what a $61 buy does.
Yeah.
1 second. By the way, I love this one. If you guys don't know, app.pitius.io is a good aggregator. It'll give you pretty good readouts. The other one is gopulse.com/X for swap. Okay, here, this is a little different. So it's tapping mostly the PHUX pools. If you go with like a smaller order here, that makes sense. 99% is going through the PHUX pools. 100% now is going through the PHUX pools. So, hey, FYI, when you're using these aggregators, let your amount sit there for a minute because it's going to continue to search for the best route and give you the best price. If you just like throw it in there and hit go, it'll actually probably not give you the best route. So you see how it keeps changing because of the arbitrage opportunities of people buying and selling it.
Yep.
What's the contract address for Ecom, PCOM? Yeah, I'll drop that in the chat 1 second.
Yeah, the other thing with these two is COM in general. I know it doesn't seem like it because it's in the multi-trillions, quadrillion supply range, but COM in itself is very rare. In that you can only get it from mining T-shares, and that's the only way you can get it or buy it from somebody who minted it through mining T-shares. And the higher the T-share rate goes up, the less comes out in the market over time. So COM in general is pretty limited. The other thing we found out with the communists from Ethereum is you're limited to how much can be bridged per day. And so it started at 0, and you only a trillion can come into the market per day. And so we're sitting at around 54, maybe 52 trillion market in terms of number of tokens on the PulseChain. So that allows the Ecom price actually to be very high on the market because it has such a low liquidity and a low supply.
So since you said it, let's let them understand what this all means. All right, so imagine you got the original Ecom on Ethereum, and there is a very small tube connecting the chain, and this only allows 1 trillion per day. There's currently, by the way, that means that the maximum inflation per day of Ecom coming across the bridge to PulseChain is 1 trillion. All right. That means it's going to be a battle every single day to see who can get their trillion through to dump it. Now, at current prices, a trillion COM is $59. I don't think, and I'm going to go out on a limb here, I don't think that the price can stay down for much longer. The reason why I say that is because as soon as people figure this out, Ecom on PulseChain is going to become in demand because you can now calculate with 100% assurance what the supply of Ecom on PulseChain is ever going to be. So if there's 53 trillion, you said there's 53 trillion on PulseChain?
Yeah, roughly.
So if there's 53 trillion right now, that means tomorrow there will be 54 trillion. And the day after that, there'll be 55 trillion. So at the end of the year, that's only going to increase by the end of this time next year, it'll only be another 365 trillion. And it's basically a squeezed market, completely squeezed. And the market makers that buy all this supply up over here can control this market. And they don't even need it. They never need it to be traded on Ethereum at any price. They just control this market over here with that 1 trillion per day supply restriction. And unless that gets updated from the devs, which I don't think it will anytime soon, this is a fixed inflation rate in terms of how much Ecom will be on PulseChain.
Yeah, and our understanding from the devs on that part is 1 trillion tokens is the highest amount that they know of other bridges doing per day to limit. So it would require quite a bit of more business change than technical. Technically, you can do whatever you want and just change the number. But as far as business policy and processes go, so anyways, we don't think it's going to change at all in the future. But yeah, yeah, it's pretty interesting that that's the case. 1 trillion per day. 1 trillion per day.
Let's see what's going on with the pulse chart quick. Any chart requests here? We're getting toward the end of the stream. You got to get going, ChrispyMan, or?
Yeah, in a few.
Okay. I'm going to go through a few things and go through the starred comments from earlier. There's a couple questions about the website and whatnot. We'll go through that in a second. Pulse is looking pretty bullish. It's consolidating up here. Created a lower high. The breakout was rejected. Created a lower high relative to the recent high, but I mean we're well above the 21-day bull market support band. RSI is clean in the middle of the band. We did have that bearish cross on the MACD here on the 4-hour, but if we flip to a daily, let's see where we're at. Just it's kind of neutral right now, neutral market. I would say like a test of the 21 daily is probably a good guess. This is a pretty good parabolic advance that started with a nice clean rounded bottom. I think that there's real demand here in these ranges. You know, granted, we don't get another freak sell down like we had at the SEC thing. Things should start to pick up, and like my next, there's a volume gap here above this resistance line. Once this gets above here, there's a volume gap there. It can pretty much go straight up to the SAC rate pretty quickly because there just wasn't that much volume traded inside that little range. So, you know, going back to the 4-hour, it is looking like bearish right now in terms of a test of the 21 is definitely in the cards. But we've broken the 21 here in the past and grinded along it from the bottom side, broke above it, tested it as support, broke below it, got above it, held it as support on this triple bottom, which was called privately in some public tweets I think I put out as well. And then we had the big ripper. So I wouldn't be surprised to see a repeat of that kind of a play again from these levels. But because now there's a lot of guys that have accumulated the lows and aren't really eager to sell on a 2 to 3x, like more than likely this just becomes another accumulation range. Test of the 21 and then some sideways action and then lead up into this next leg higher to go back to SAC rate. Pulse X has been overperforming Pulse for a while now. It can still come down to the 2.8 pulse per Pulse X level and hold that exponential curve that we're building up and still go up and break through this high volume area and test that and hold that as support and then go another leg higher to where the most volume was traded up here around 0.4 pulse for Pulse X. It's still holding on the RSI in terms of this trend. It's looking good that way. Of course, all these things can break down and go to zero, so just keep that in mind too. No pressure. Ink doesn't look so good. It got rejected off here. I think a lot of people have just been dumping ink for whatever coin they're chasing, which is, you know, good on you if you called that. One day ink will have a return, whether that'd be in next year or 6 months from now, who knows? But it's definitely the laggard play here and the cheapest thing between Pulse X and the ink. Again, Hex Pulse, it's going to, like if this replays out again, kind of like what we had with these last breakout, like it'd be totally normal to come back and test this red line, the top of this ascending triangle. Or it would be, I mean, the way, knowing Hexicans, the way they like to sell, like it's totally normal if it breaks back down into here and then builds up for another big move. That's totally normal as well. It's definitely coming in to test on the MACD from flipping bearish. That cross hasn't happened yet here on the daily. So if the momentum on the stochastic gets down here below 20 and flips back up, this could just basically stop here and round out and go higher. Maybe a test of this range, something like that, around the 50 line on the RSI. And this is measured, this is PHEX measured in pulse. And then you know that I'm very bullish on EHEX. I think that one's underrated, and it's been trading a shit ton of volume on the Ethereum side in the last week. And there's bigger moves playing out here. I think a lot of the old money is fading, and new money's coming in. And from what I'm seeing on chain, we're seeing guys coming in and unloading 20 ETH a clip, buying up hundreds and hundreds of ETH worth of EHEX. Probably trying to create some sort of a support structure here. I wanted to point this out earlier, but I forgot to. which was that even though against the dollar chart we're below this resistance in Ethereum terms, we're above resistance now and trying to flip this grind line as support. So it would be totally normal to continue to test this as support as long as necessary and accumulate as much, market makers accumulate as much as they can in this range before sending it up a level higher. Now I know that there was a attempted breakout last night which failed, but with how much volume is being traded here, I wouldn't, and how much ammo the buyers have in hex terms, they're not going to be too eager to sell, and the reason is because there's no liquidity to sell into even if they wanted to. So their best play here would be to mark it up and create demand in a new zone and let the market take it higher from there. Now there is a lot more ETH bid support that has stepped in here on the left side of this red line. More ETH are sitting here, which means that somebody wants to accumulate if there is a sell down as protection. But the heaviest stuff is ahead of us. So there's a lot of hex here to accumulate in this bands. And so, you know, maybe these market makers just keep accumulating up the band and then letting it sell back down. Accumulate up the band and let it sell back down. It's another way to accumulate. No, it's just not just one guy. The whole market's kind of slowly shifting this forward. So all this hex here will probably get accumulated, and then we'll get into that high volume gap. I'm sorry, that low liquidity gap down here, which is a 3x gap to hit out to the next brick, which is up around 3 to 5 cents on both the USDC pair and on the ETH pair.
Nice. Hey, I'm going to head out, but I threw something up on the screen if you want to look at it real quick. Pretty funny. You know, listen, I love PHEX and I love EHEX. I'm good either way. But I found this to be pretty cool. We, you know, I do this tracking every week on DCing into Ethereum HEX and versus HEX and some other things. And so at this point, you know, if somebody had started their DCA back in May, you know, at the launch of the bridge on their HEX from Ethereum, they'd be up ROI 85% versus 46 from HEX. So, you know, take that for what it's worth. I mean, it's just another snippet looking at it a different way, but pretty interesting stuff.
Thank you very much, ChrispyMan. I appreciate you for being with me.
Yeah, hey, thanks for the invite, man. I appreciate it. This is always good to talk. I know we're talking all the time, but take it easy, guys, and thanks again. We'll see you later.
We'll see you, Crispy. All right. What else? So yeah, I saw a comment in here. Someone was asking about whether or not next week. Oh yeah, Crypto 7 wants to know bullish buying pattern to resume next week. Well, look at if you remember back to the beginning of the show, I'm bullish right now on the markets in general, and I just think Bitcoin got ahead of itself. It did a nice breakout here, and so, you know, it's actually holding this trend pretty good. Now, a break of that trend slows things down temporarily, but like it's so far ahead relative to the other markets that I you know, sometime by Thanksgiving's typically you see big things happen for Bitcoin. Sometimes it's a big breakdown, and then like if you go back to Thanksgiving of, let's see, Thanksgiving of, okay, here it was. We had this huge break. So we had already been in a bull market, right? This is November here. This is going into the last bull market. So we had like that initial breakout, retracement, another parabolic move, bull flag, breakdown, and then the parabolic advance, right? And then end of the month, this was the big breakdown, end of November, right? So that was a big move, but then it recovered. So I would look for big action this month, volatility-wise, on if this is the beginning of a bull market, which I'm for phase 2. Like, I think a lot of people don't realize that we've been in a bull market for Bitcoin for a while now, especially this banking incident where the regional banks started to fail out and people fled to Bitcoin as a safe haven. It kind of locked in the bull market for me, and that's when I really flipped bullish. So yeah, if this is like an indicator of what's to come, you know, some sideways chop for a week or two, and then like a parabolic move, and then some sideways, and then another one. You know, we could be at 40K by before Christmas on Bitcoin, which would be reinforcing the idea that, again, here, dollars getting smacked down, which is good for risk assets. Fed funds is paused. The stock and bond markets combined are in this the U.S. bond index, I'm sorry, is rising. So bonds are rising. That's good. Yields are falling, which means that hopefully we're reverting back to somewhat of a normal setup in terms of yield curve. And then here on this bonds index versus stocks index, that's a huge bullish engulfing. That means that bonds plus stocks just overperformed the last like 3, 4, or 5 weeks of down. It got erased in one weekly candle. Now this candle doesn't close till Sunday night, but Friday night's really what matters in the real TradFi world. So I wouldn't be, if this closes above this midline here. I mean, that's really confirming a lot of the things that Bitcoin and oil were already alluding to going into it. So keep that in mind too. Yeah, I'm bullish on the market. What else? I'll go through these last few comments that were starred. Any insights into our new friend Alex, the 3AC whale? Well, I saw him. I think it was him anyway. He brought in another 330 ETH last night, assuming that it's a connected wallet, either him or a group, someone who's in his group. They brought in this zone, and they actually pumped it up to like 1.6 cents here, and then it was just met with huge resistance. But yet we're holding on both sides. So price is getting held up, and price is getting pushed down, and it's getting squeezed inside of here. And so I think like smart money is going to accumulate this range, and this is going to turn into a bull flag. One way or another, we're going up. I don't know how many more people are too eager to dump EHEX or PHEX at these levels. It's just really low priced. In terms of the pro membership plan, so axisALiVE.com, go check it out. Click on the services tab here on top, and then click on memberships. A couple things. I do chart sets. Usually once a month is what I've reduced it down to. But most of the content is getting pushed through the Telegram chat, like daily market updates, charts, different pattern setups, macro. And then on Monday nights, we do this private live video session where sometimes I'll have special guests on, and I'll just look at all kinds of content, looking at all kinds of charts, take chart requests, and talk about macro with the contrarian, who's a legacy markets commodities trader going back like almost 40 years now, as well as I've had people like Kareem on as well and he actually called the EHEX breakout about 6 or 7 weeks ago. He said that this was going to turn into like a big squeeze, and then the EHEX whales were going to jump in and just move it higher, and that ended up playing out. And then in addition to that, you get a free course. So once I launch this technical analysis course that I'm building, you'll be able to, if you sign up for pro, you'll be able to get that at no additional costs. Of course, there's the boardroom Telegram group access, and then once a month I do like a monthly roundtable discussion, which is just a Telegram voice discussion where everybody gets to come and like address their comments, concerns, talk about the markets. And I've actually added a few sessions. Like this month we did 3 sessions because there's just so much going on and so much to be updated on with the PDI mania and all the reflection coin mania and the move on Pulse and PulseX, and the Hex is moving. So there was just a lot to talk about just in the RH side of things. And then in addition to that, the pro membership comes with 20% discounts on other things. We just did launch the merch store not too long ago. So if you want to get any of this cool merch, it's available for purchase on the website too. And that's all shipped out third party, so they take care of it. Some people are bearish on chain analysis of EHEX. Again, like to what I said earlier, yeah, there's definitely people that are bearish on things like BankX and this unknown whale. But the most action we've got on the EHEX chart positively in recent months has been because of this new whale. And in terms of BankX, they're always going to be a looming over our heads dumping forever, eternally. Like they're not dumb enough to nuke their whole bag. they're just always going to be there selling. Like whether if it's 10 million hex a week or 10 million hex a month or 100 million hex every 2 months, it doesn't really matter. Like they got 700-ish million hex left. And they don't always stake it, so they're not gonna have an endless supply, but expect them to just be there handing off their hex at every single new level. I don't think that they're in this to nuke the price down to zero by any stretch. They don't have they've sold, but they don't sell that nastily. So I just don't think that we should be that concerned about those things as being like bearish to the point of killing the project. A lot of people have had 400 million, or a lot of people have had 500, 600, 700 million hex over the course of the last 4 years. So I wouldn't let it deter you from thinking that hex on Ethereum or even just hex on PulseChain couldn't perform. What else? What else can we talk about here before I wrap it up? Oh, I did want to pull up the axis chart before I get off and explain what's been going on that neck of the woods. So here's the axis chart on the 4-hour, and going back to this local top here at 13.4K. So a couple things happened. We saw one of the bigger wallets step in at basically what we've been dealing with in this most recent sell down on the axis chart is I see the thing about the arbitrage with CST. I mean, it's an opportunity there for sure. So we had a couple wallets that were big that got in early on Axis, right? So if we go to the USD chart and I type in a large amount of pulse, and why I'm doing that is because I'm going to filter out the biggest sellers right here. So here's one of them. This wallet here got in to Axis at between $2 and $10, right, on this candle. $5, $10, $10, $10, $10 buys, and then a couple of $10 buys up in here around $50. This guy decided that he thought this thing was going down, and he nuked 10 coins on a whim, and pushed it all the way down here. Now I was looking through the chain, and it looks like he's down to 3 coins left. This guy extracted 24,000 in one market sell, right? So if you go to the axisalive.com, there's actually like a market supply dashboard that ChrispyMan put together. And so if you want to come in here and see what the coin distribution is of the market supply, you can come in here and see for yourself. That guy doesn't even exist on the leaderboard here. Like he's not even in. He's got 2 wallets that's connected, and I think he's got like 3.15 coins left. So that threat has been basically eliminated. But what it resulted in was this massive downside move on the chart. He got shook out of his position, and now we've been pretty much stable. A couple of cool things happened after that happened on this chart. So in terms of like big sell downs, the original pump. So for those that want context, the Axis chart was trading roughly around like $600 to $800, and then we had 2 big players from Hex come in and pump it up. One pumped it to 1,500, and then it sold down. And the guy that sold this down was the guy that sold down this big sell here. And then there's a secondary Hex shark that came in and pushed us all the way up to 10K in like 15 minutes. So what this resulted in was like early guys that got in at like sub $100 or around $100 to $200, they nuked their positions, and the price fell 89.81% in 5 days. And then from there, we created this giant ascending triangle structure, and then broke out and saw some of the biggest PulseChain sacrificers get in around this region between 3 and 5K. And then, coming to now, modern time, from the all-time high down to the base, it only fell 85% this time. And we were able to rally back. The market bought it all the way back to like 4,800, 5,000 roughly from a low of 1,500 bucks, 1,900 bucks it's saying here, but 1,500 on some charts. 154%, and then overnight it went sideways and created this triangle, and then we saw that hex shark that originally pushed up the axis chart in the beginning came in and he unloaded another like 500 million pulse and pushed us way back up to the $8,000 level. And then this was just ever since then has just been profit taking from these guys that sniped this bottom, or guys that are selling for a loss from up top. But this kind of rally actually was pretty crazy to see live as it happened, because you saw this massive spike down, and then the market came back in and pushed it up 324% in 20 hours. So ever since then, it's just been, market's been kind of trying to find equilibrium and find where's fair value now. Now that we're not just going parabolically up forever. And it's been fun to watch. It's been exciting. I think in terms of like threats on the chart, a lot of these 4 big top holder wallets, they're not too eager to sell. There's one, I think it's this guy here, 42.84, who has sold a little bit. Let's see if I can find him. Remember now, there's only 320 coins in the market supply, so it's like super scarce as it is. So any kind of bid pressure is going to get a lot of that coin off the market and push it, because there's only about less than a billion pulse in the pools. It'll really push up the the price quickly, and as well as if some of the early guys come in and sell off, it could push it down quickly. So like max downside risk, I think, is like that 85 to 89% level. But see if I can find that guy. I think this is him. Yeah, so this guy here is the other wallet that is kind of a concern. He's sitting on a fat stack of Axis. He got in around the same time as the other guy that nuked. He's got 42.84 in his wallet. And so, you know, I don't know what he's going to do with his coins, but he does have a tendency to sell when things look rough, like here. And then he sold this local top, kind of slowed us down from making a new high, and then sold here. So I'd keep an eye on that wallet in particular if you're watching the Axis chart. Kind of watch it. But generally, if you click into here and you look at the chain, we're up to 306 addresses holding, and most of these guys are holding and aren't really too eager to sell based on what I'm seeing on the chain. And not many people. I think there's like 20 wallets that even has more than 2 coins. So the distribution is skewed heavily toward, out of the 320 in the market supply, the distribution is heavily weighted toward like more diamond hand long-term believers, outside of the one guy who I'm not sure what his intentions are. So that's kind of like a cool way to like break down the ecosystem right now. There's only 320 coins on the market. There's only 10 coins in the Pulse pool, even for sale. And if you want to take a look at the liquidity here, you can go and see, flip to page 3 on this, and you'll be able to see kind of where that's all divided up. So that's the Axis coin, kind of in a consolidation and a rebalancing period after that big sell-off. All right, guys. If there isn't any other questions, just reading chat right now. A lot of calm talking here. Calm has been the talk of the town. Johnny Sachs has been sticking the tip in on that for a while, so it's good to finally see him come up with his video and then to launch that strategy. I think it's pretty cool to see somebody actually like trying to build value, right? I love to see people trying to build value. So that's great. All right, guys. Go check out Monday night private sessions, axisalive.com. Come sign up, be a member. The alpha's always flowing. I know a lot of guys have been kicking ass on the leverage trading over there. Not everybody leverage trades. Some do, some don't. Fame is a cool tool for that. And yeah, we will see you guys on the next stream. I don't know when it is, but it'll be soon. I think there's rumors that there might be a Crypto 7 axisALiVE stream next week. So keep your eyes peeled. All right. Appreciate you all. Peace.